Hello, hello, hello. How's it going, everybody? Welcome to the Capital Hungry Monday Market Update webinar. If you are new here, basically through the next 30 to 40 minutes, I'll be breaking down current market fundamentals, market sentiment, any key important headlines, a volume and volatility read, as well as doing analysis for trade ideas on gold, GBPJPY, GBPUSD, EURUSD, USDCAD, and the US 30 stock market index. Can everybody hear me loud and clear before I get into it? Am I too loud? Am I too quiet? Might depend on your volume as well. Okay, let's jump right into it then, shall we? So, what we noticed last week as we were starting out the new quarter, obviously ending Q1 and starting Q2, was that we had much lower and slower volume and volatility. This is very well known and very well expected, as we had major fundamental catalysts the months prior, of course with the Ukraine and Russia tensions, and as those events got priced into the market and we closed off the quarter, we saw the market liquidity drop overall. But as we're coming into the second week of the quarter now, we can see volume and volatility starting to pick up. Bank of Japan Unlimited Bond Buying Program still has Japanese yen digging deeper into its 2008 and 2014 historical lows. So Bank of Japan members themselves were discussing that they do not mind a weaker Japanese yen, as it does have some benefits for their international business activity, and they can easily see USD JPY going up to 130 flat before they have any intervention with rate hikes. Of course, they don't want to see monstrous market moves where the Japanese declines in value at a very aggressive rate, but from their monetary policy stance, as well as the current structure and price action on the Japanese yen, it's still very bearish, which is great for us to play in our Japanese yen pairs for some buys, like on GJ, Euro JPY, AUD JPY, and so forth. Even though we still have Russia and Ukraine invasion active and going on, a lot of the various tensions have already been priced into the market, and we don't have any new fear, uncertainty, and doubt yet. Now, don't get me wrong. Of course, a lot of these various fear catalysts, when they enter the market, it moves in waves how the market actually digests and prices it in. But everything we've seen from the actual invasion, the economic sanctions, a lot of the various military tensions, the retaliation from NATO and NATO allies, a lot of those events have been priced into the market. Otherwise, if we were still seeing that massive market fear, we wouldn't have stock markets globally holding as bullish as it is. Okay? Another key fundamental factor to focus on is understanding that global inflation is still very high, and we have US CPI data tomorrow, which is our inflation reading from a consumer perspective when you're looking at the cost of goods, the consumer price index. So that's going to be in focus for New York session tomorrow. In terms of market sentiment, US dollar is still holding bullish as the world reserve currency and business currency, as we of course still have lingering tensions globally, and due to the due to the Federal Reserve keeping a more hawkish tone, which is all bullish factors for the US dollar, especially being bought up from its historical lows after we had such low interest rates, such a large increase in the money supply, and such a large increase in inflation. Japanese yen individually is still very bearish, as I discussed in the previous slide there, because of the Bank of Japan's promoted unlimited bond buying program, where they're still actively providing that stimulus and devaluing the yen in the short term. It's still fundamentally bearish and technically bearish when we're going to look at it in a second. And as a lot of the fear, uncertainty, and doubt with Russia and Ukraine tensions have been priced in, a lot of the 25 basis point interest rate hike priced into the market, and global inflation as well as greed still extremely high, global equity markets are still holding relatively more bullish. So we're still looking to play some US dollar strength bias. We're still looking to play some Japanese yen weakness bias. and we're still looking to understand and play the potential strength in equity markets, just adapting to some pullback points before continuation moves. In terms of some headlines, some notable headlines that are relatable to what I'm saying, we can see that early in the morning, as I'm talking about, USD JPY went up another 1%, edging up to 125.5, and we still have a lot of room going into the 130s, signaling that the dollar is still strong and the yen is still relatively weak, and we can use that correlation to our advantage. We still had Russian Foreign Minister Lavrov say that there's no pause in the military operation in Ukraine before next round of talks. So the invasion is not seeing any slowdown, but what's important is we noticed that this didn't have too much of an impact in terms of bringing any market fear. Then towards late New York session, we had Fed Speaker Evans talk about how high prices will still persist longer than they thought, meaning inflation is still going to be high for a while, as the 25 basis point interest hike isn't really doing much to this historically high inflation from the massive money printing that happened over the last three-year period and huge stimulus and pumping of the markets. So, and this is important because we have US CPI data reading tomorrow. And great for us as scalpers and day traders, we can see market volume and volatility starting to pick up. Very nice moves we had on GJ as it moved up over 100 pips from Asian session market open overnight and into New York. Very nice moves on gold continuing the upside as global inflation is still high, and we have that solid bullish market structure with buyers in control and going into the CPI data tomorrow. We still have that US dollar strength prominent, even though our dollar pairs were ranging a bit more, and overall volume and volatility is looking a lot better than it was in the previous week. Now, before we jump into the analysis across the pairs now and trade ideas, combining those fundamentals, sentiment, and technicals, we just want to understand what economic events we have on the table, as that's very important because it impacts these currency pairs, precious metals, equity markets that we trade day in and day out. Okay, so April 11th here, just in the Asian session here, we have some corporate goods data for Japanese yen. This is going to be relatively neutral, minimal impact on the Japanese yen. If anything, for the new daily period, we might just see a quick pullback on the yen individually to collect more sell orders before it continues down. And I'll show you what I'm talking about in a second when we look at the yen individually. Then, over the London session, pre-London hours, some inflation figures from Germany, where the forecast is relatively in target with the previous figures, and I'm still expecting high inflation in the Eurozone. So expecting CPI figures to still be relatively high, as we haven't seen much intervention by the ECB or any reason for inflation to be going down. Also at 2 a.m. Eastern, we have some labor market data for GBP, for the United Kingdom, impacting GBP. All at 2 a.m. Eastern pre-London hours, we have average earning weekly for the quarterly and yearly change, employment job change, unemployment rate, and job count. So this is going to be very important when we're looking at this information overall. We're having some expectations with an increase in employment change, which is good, and a decrease in the unemployment rate, So I'm still expecting some decent labor market data in the UK, especially as there isn't any real fundamental catalyst for there not to be, especially coming out of a lockdown, having more economic recovery, and so forth. So this is still going to support our GJ bullish bias. At 5 a.m. Eastern, during Asian session close in the new 4-hour candle for most brokers, we have some economic sentiment data for Germany, which is expected to be weaker. So on top of the higher inflation and the weaker sentiment data expectations, we can see Euro being a bit more flat when you're looking at the basket of risk currencies, especially against a stronger US dollar. Then what's really important for me, what I'm focusing on, especially as a gold intraday trader, and for your impact on equity markets, US dollar as the world reserve business currency, is during our New York trading session, North American market hours, 8:30 a.m. Eastern, CPI, yearly, monthly, core CPI yearly, with expectations of pretty aggressive increases across the board. Now, what we have to understand is everybody and their grandmother knows inflation's still going to be high, to the point where the expectations and forecast, the economist forecast, is already buffered to expect the inflation to be very high. So we have to take this with a grain of salt in terms of the market impact. Usually when the expectations are very well known, it's already going to be priced in, and you might see some opposite moves where you see those liquidity grabs or price setups or sweeping of liquidity in the markets. For example, normally because inflation's so high, it should lead to just gold being bullish, other commodities and so forth being bullish, dollar more bearish in the short term, right? But because it's so well expected, it's so well known that the inflation is high, those are the report releases where when the report gets released, you'll see gold go down $10 an ounce first, drop 100 pips, grab liquidity, then continue bullish throughout the day. So you'll see these heavy price grabs or periods of indecision because the data is so expected. You know what I mean? Something you have to watch out for. So it's really well known inflation is high. The forecast is expecting it to be high. What would really have us just having a straight impact in gold bulls is if the inflation comes out higher than the forecast, right? Which is 8.4% for the yearly, 1.2% for the monthly, 6.6% for the core CPI year over year. Okay. Now, in terms of sentiment, we can still see equity markets are still holding relatively bullish across the board. Hang Seng China markets is a completely different situation. But when you're looking at the majority of stock markets, even when you're zooming out here and looking at US 30 on the higher time frame, we're still very bullish above this demand zone around 33,800. So we're still seeing that investor confidence relatively high, but we have to watch out for the expectations of higher inflation causing a quick price grab before we continue to the upside. Similar idea with gold, precious metal gold. So in terms of market sentiment, we're not seeing as much buyer volume in the equity markets, but it's not like we're seeing any aggressive downside, any fear, uncertainty, and doubt, right? We're still looking to play bullish bias on the US dollar, especially as we broke above previous highs, seeing a lot more buyer volume and buy orders in the market, potential to go back up to 100 flat price point. We're still looking to play Japanese yen being bearish, driving down into historical lows 80 that we haven't seen since 2014 and 2008. Volatility index, of course, as equities are just softening a bit and seeing a bit more profit taking on the US equity markets, you can see the volatility index is edging just a bit to the upside. But overall, it's still extremely bearish when you zoom out, and any of these cat bounces or short-term fear, uncertainty, and doubt that you do see in the market, it gets waved out relatively just as fast as it comes in. So it's pretty normal to see these quick little fear spikes on the volatility index from the low, but it's still very bearish on the higher time frame and intraday time frames. Okay, so I'm still looking to play higher time frame bullish bias on gold, still looking to play weakness bias on the Japanese yen, which means GJ buys, and I'm still looking to play US dollar strength in the short term, and then we're gonna have to watch depending on the CPI data in the morning. Now, gold. Some technical and fundamental analysis. So, gold, of course, peaked these all-time highs at the 2070s, 2080s, when we had the lockdowns, global mines and production facilities shut down, interest rates very low, money printing and inflation very high, and the massive fear with the pandemic, right? As that all got priced in, you can see we entered this corrective phase for an extended period of time, coming all the way to a 1680s very key demand zone and price sensitivity area of interest. From this area, we did start to consolidate for an extended period of time until we had Russia and Ukraine tensions come back into the table, which brought some new fear, uncertainty, and doubt, where in the short term, the same time we saw the same time we saw gold go all the way back up to these previous highs was the same time we saw the equity markets do a very aggressive correction here. So we saw liquidating of positions in the equity markets in a pretty aggressive drop from the all-time highs, this being fundamentally induced by the Russia and Ukraine tensions and that fear, and that liquidity in the short term being moved into gold as a hedge as you go all the way back up to these previous all-time highs, have buyers liquidate their positions and exit out here, and then dump it back in the stock market from that deeper demand zone dip at 33,200, right? So that was extremely interesting, but we're still very, very, very bullish on the higher time frames on gold, especially as we're holding above that 1720s and 1700s demand zone, creating much stronger bullish market structure on the intraday, breaking above these previous price sensitivity areas of interest. And on the daily here, after having very large impulsive moves, you can see from this demand zone, after having a very large aggressive buyer impulsive move with the fear, uncertainty, and doubt, we did have a pretty equal 50% correction as we had buyers liquidate those positions, and we're creating a very strong daily support where it's looking like more buy orders are being collected in the market, especially with expectations of higher inflation tomorrow. I also want to show you something very interesting in the way gold behaves on the intraday time frames when you have these buyers and sellers transactions. So let's look at these scenarios here. Look at this scenario where you had gold have very strong intraday upside moves, then pretty equal profit taking, coming down to a very strong demand zone. But what's important is after you have these aggressive impulsive moves, that money being made in the markets, the fundamentals being priced in, you can see it's very normal for gold to consolidate for a period of weeks and months, right? Before and after. You can see a similar situation with this demand zone here and the exact technical and fundamental repetition we had. So we had this explosion in gold price with when Russia and Ukraine tensions were first actively going on and bringing that fear, uncertainty, and doubt into the market. We went all the way and had buyers peak those previous all-time highs at the 2075s. And then after that, as we were closing off the quarter and starting this new quarter, you can see we relatively started to enter this consolidation phase. It's just a consolidation phase. It's not a resistance. It's not sell orders entering the market, especially as we still remain and respect that demand zone, very similar as you see here, and still continue in the overall bullish trend, right? You can see once you start to see more buy orders as you're breaking above the consolidation phase, you have a lot cleaner upside to potentially revisit the previous highs from a technical perspective. So give or take a potential CPI liquidity grab, as long as we still hold above that order block and consolidation zone, there's a lot of room with the fear, uncertainty, and doubt still lingering, and Russia and Ukraine tensions can escalate at any moment. And of course, very high inflation and 25 basis point rate hikes being priced in for gold upside to at least revisit the 2,000 price points again. For me to really see from a technical perspective, long-term bears or at least some sells on gold here, you'd have to have some clean breaks below the 1900s. That shows a lot more buyers liquidating from these historical high price points and sell orders jumping in, where we validate that with the technical breaks below that demand zone. But just because we're consolidating on that demand zone, or just because we're having a bit of corrective phase as you had the impulsive moves take place, doesn't mean you're bearish on the higher time frame. Okay? So now, when we take that understanding of expectations of higher inflation and the current structure, you can see we can see some nice intraday bullish market structure forming as well, with these white levels being historical key levels. So from here, we are at least printing some higher highs, right? Even if we get deeper pullback phases, in my opinion, to like even 1929 again, gold is still extremely bullish on the higher time frames with expectations for continuation buys to the upside. Now, I'm expecting deeper liquidity grabs with CPI tomorrow because it's very expected of the high inflation. But it's very normal on how gold behaves on the intraday time frames that you have these aggressive pullback phases and you go to pull back to more favorable demanded price points, collect more buy orders before continuing and having enough volume to extend to the upside. So I'm not looking for any sells. I'm only looking for buys at 1930, 1939, 5, 1953 post pullback breakout, 1965 breakout. I would only switch into a sell side bias if inflation somehow, by a miracle, by some Federal Reserve manipulation, is low and we break below the 1920s. Okay. GBPJPY. Now, GJ is extremely bullish on the higher time frames, and especially with the historical repetition we're having from these lows. Anytime we've had an economic crisis, we still conveniently come to this price point when you're looking at GBPJPY, and we have more buy orders collected and very, very favorable upside from these areas. This was the 2008 GFC. We had a very aggressive bounce, revisitation of those lows, then a huge bullish rally as you're having interest rates going up from the Bank of England. You're, of course, having a weaker Japanese yen as the fear, uncertainty, and doubt is priced in. Buy orders collected from historical lows, and boom, right? Then you, of course, have this downside here. So GFC here, same low. Brexit brings a lot of negativity and volatility to the United Kingdom economy, of course. Huge changes on the infrastructure, jobs, import, export. You guys understand, been going on since 2015. Comes down to the same historical lows, bounces, revisits, with this being the pandemic, and now seeing some very, very similar technical structure where we're breaking above the bear structure. A nice order block here with more buy orders collected, and a lot of potential where if we don't get any new fear, uncertainty, and doubt, we still have a lot of potential to squeeze to the upside. Now, it would be very nice to get a potential pullback on the higher time frames just for better risk versus reward buys, just when we're talking in terms of speculation. If we do get any short-term fear, uncertainty, and doubt, it'd be great to get a pullback to 156, then ride the buys back to the highs. But GJ is very bullish on the higher time frames, very bullish on the intraday time frames here as well. Okay, now we still have targets of revisiting these exact higher highs around 164, 164.5. If we did get deeper pullbacks, I would see us still holding bullish, even coming to 162.5. But right now, as we had these intraday highs printed, you can see we're just in some minor pullback structure here from the highs, right? Just some minor pullback structure. If we fail to break 163.2 and double bottom, I would still be looking for buys from 163.5 and above the highs. Japanese yen is still weak. UK equities are still holding bullish, showing investor confidence still relatively high. Very bullish price action and market structure. If we break below 0.200 here, 163.2, I would not sell GJ. I would just wait for the deeper pullbacks and then the continuation buys, as it would just be a pullback phase to get better, to push price down to a more favorable demand zone, collect more buy orders to have that volume to extend higher, more than likely coming to this previous high in price sensitivity area, lining up with the key level. but I'm really just looking for pullback buys on GJ and continuation breakout buys on GJ. If I see the pullback phase extending deeper, I'm not going to sell it. I'm not going to personally counter trend trade it. If you want to do that, you can, but I just like playing with the fundamental trend and the technical trend. So I don't mind being patient when we're consolidating, for example, and holding buys from the low of the zone or waiting for the breakout. And I don't mind when we're doing a pullback structure from the highs to wait for the pullback to complete and jump back in with the main trend. Now, with our dollar pairs, this is a completely different situation. Our dollar pairs are far more bearish on the higher time frames because of how bullish the dollar is individually. And of course, because the US dollar is the world reserve currency and global business currency still. So we can see EURUSD and GBPUSD, very similar structure, extremely bearish on the higher time frames. Sellers consistently printing lower lows. You have pullback phases from these lows as sellers take profit and liquidate some positions, and dollar has a correlated pullback, which we could get if we don't break these lows here. But nonetheless, overall, you have more sell orders enter the market, continuing bearish due to the dollar dominance. Same thing here on GBPUSD. Right? So what we have to watch out for though on both GBPUSD and EURUSD is, yes, dollar's bullish. Yes, these are bearish on the higher time frame, but where are we sitting at both of these price points right now? GBPUSD is at its previous lows from mid-March and didn't break yet, right? And EURUSD is at its previous lows from March as well and didn't break yet. And even though we're bearish, just look at how these pairs behave based on the higher time frame. Just because you revisit a low doesn't mean you always break instantly. You can have very aggressive pullback phases in these examples here, right? You can even see some smaller examples where you don't instantly break. You have these pullback phases that can occur. Does that make sense to everybody? This lines up very well with the fact that we have expectations of very high US inflation tomorrow, which would be short-term bearish for the US dollar. Okay? So when we're looking at GBPUSD from a technical standpoint and from a fundamental standpoint, we would really need a fundamental reason for dollar continuation. Otherwise, the potential high inflation tomorrow can have us do a pullback phase, which would go to revisit these highs before continuing further bullish. And that would correlate to EURUSD having a bounce from these previous higher time frame lows, and GBPUSD also having a bounce from these previous higher time frame lows. Okay? So we're in a very tight situation on our dollar pairs. Dollar pairs are for sure way messier to trade right now as a scalper or as a day trader compared to gold or GJ. Okay, something you have to look out for. But nonetheless, we still have this bearish market structure intact on the intraday time frames. But these are some trade ideas I would see, okay? If we fail to break these lows and come above 1.304 on EURUSD, short-term pullback buys with expectations of very high US inflation, short-term weakening the dollar, that would just be very short-lived for better risk versus reward sells at a retest of 1.309 and the bearish market structure. So just having a pullback phase from these new lows before driving down into lower lows. Otherwise, safer sells would be clean breaks below 1.2985. EURUSD, similar idea here if we don't break these lows. Sorry, that was GBPUSD I just showed, and EURUSD here. you can see we're starting to consolidate here, and this is a really indecisive area at those previous higher time frame lows, where you can see how messy trying to trade it, how stressful from a psychology standpoint it would be trying to day trade this, scalp it. Yes, you can play the range accordingly if you got access to the key levels. We get the alerts in the private channel. But other than that, even I had been advising in the Capital Hungry private channel just to stay away from dollar pairs until we either have some more impulsive dollar volume with a fundamental reason for it. Otherwise, we're going to be playing a potential pullback phase. So just look to play the range break on EURUSD. If we see that dollar weakness and break above these rejection points in key level 1.093, you're going to see EURUSD enter a pullback phase from those lows as sellers liquidate positions, and we have dollar index have a correlated pullback as well, which can be fundamentally induced with the expectations of very high inflation tomorrow. Otherwise, I'd only look for sells below these lows at 1.085. I don't want to really touch this zone here. USDCAD is showing us a lot more bullish volume for two reasons. One, we do have that individual US dollar strength, and two, the Canadian dollar has been weaker just in the short term. The same time, crude oil has been giving back some gains from the highs as a lot of the fear, uncertainty, and doubt was priced in. So you can see the fundamental catalyst that led to oil exploding to these highs from roughly $92 a barrel to 128 was the initial Russia invasion of Ukraine and that fear being priced into the markets. But as it got priced in, you can see that got corrected and we're back down to that same demand zone with oil being relatively softer on the intraday time frames. There's a very strong correlation in the currency markets between the Canadian dollar and oil due to one of Canada's main revenue sources being the exportation of crude oil. So when crude oil is more bearish on the intraday time frames, you usually see Canadian dollar a bit more bearish as well, and vice versa when it's bullish. Well, that's why when oil was exploding bullish here and the Canadian dollar is holding a lot more strength, you saw here how bearish USDCAD was. Right? Boom. But as we came down to that previous weekly price sensitivity area and still failed to break, you can see we had a nice buyer's bounce after retesting 1.24 and breaking out of this minor bearish market structure. Now, if we do have the high inflation tomorrow and it's higher than expected, that's of course bullish for commodities and precious metals like crude oil and of course gold. So we can see oil have a very aggressive bounce from that demand zone at around $95 a barrel due to higher inflation and US dollar a bit bearish in the short term. That would mean I'd see expectations of some deeper pullbacks on USDCAD. If we broke below 1.256, I would take some short-term sells to set up better buys from 1.25. Just because I see with the high inflation tomorrow, if it's higher than expected, or if we just have a quick liquidity grab, then a continuation with the high inflation, that would lead to some more oil bulls and short-term weakness on the dollar. It's just that the only thing we have to watch out for is how priced in is the high inflation already, because it's so expected. Remember, everybody and their grandma knows inflation's high, and even the forecast is already buffered in that way. Otherwise, safer buys above this medium-term zone at 1.266 for some continuation moves. US equity markets. Now, from these all-time highs peaked, record-breaking all-time highs, you can see that we had some profit taking and liquidating of buy positions, driving down to almost 32K flat, pricing in the fear, uncertainty, and doubt with the Russia-Ukraine tensions and the 25 basis point rate hike by the Feds, bringing us back above this very key technical demand zone at around 34K, 33,800. We had a very strong bullish upside move from those lows, and right now we're just having a pretty equal side correction. But as long as the equity markets still stay above 34K and we don't have any new fear, uncertainty, and doubt, I don't see stock market buyers ending their greed train just yet. I can't expect them to see trying to squeeze out as much as they can, going back up into 36,000 before seeing a real liquidating of positions again. I would only be bearish if we came back below 33,800 from a technical perspective on the US equity markets. So when I'm looking at US 30, even deeper pullbacks to 34K, holding 34,300 and still buys above 34,600. Okay, everybody? So we went through the current fundamental points, market timing, what's going on with volume and volatility, what's impacting and why the Japanese yen is so weak, why we're seeing equity markets still holding bullish, and what's going on from a fundamental perspective. We went through market sentiment analysis and individual analysis on dollar, yen, and equities. Went through some notable headlines that relate to the topics of discussion. Understanding volume and volatility is picking up compared to previous weeks. And some analysis across pairs. Don't forget now, all of us are manual retail traders with emotions, things going on in our lives that can impact our decision-making process, right? So even with great fundamental or just great technical analysis and great planning, you can still fail if you're not in control of your emotions and psyche. This is a very, very delicate game that we play, and you have to be very, very selective with your trades and make sure you follow a systematic approach so you can be very disciplined with your approach and how you trade the markets. So stay smart, follow your trading plan, follow your risk management plan, focus on the long-term vision, keep emotions out, and avoid crashing your account. I hope you guys enjoy these webinars. I'll try to keep them as informative, educational, and short and sweet as possible so people can re-watch it for the information and trade ideas. But yeah, I'll see you guys next time. I'll be seeing you guys more on Raja's stream. I'll be showing up more in the morning, waking up earlier, being a guest more often, giving my 2 cents and answering questions. And I'll also see you guys Wednesday for our New York scalping session. All right, everybody have a great night. Have a great day. Check out all the resources in the description. Like and subscribe, and I'll see you all later.